Good morning, Doug.
Hey, good morning. Hi, everyone.
I need to share some disclaimers here so you guys can be safe and sound and be in a good place.
That's right.
What are you going to do to be safe this weekend, Doug?
I don't know. I'm hoping to ramp it up. I've been a little too safe lately. I'm hoping to ramp it up. I'm hoping to get in some water skiing this weekend. I haven't
Nice.
skied or lit all this summer. And
Nice.
so, yeah, that's something I'm looking forward to doing is ramping it up.
How old were you when you learned to water ski?
Well, I learned to wakeboard in college from a college roommate. My college roommate Spencer. What he did for me in my life, I can't thank him enough. He just encouraged me to dare, and he did. He did it without saying a word. It was just from watching him, and so he helped me. He helped fuel adventure in my life. And so that's why we named our third boy Spencer, because he gave me something that I never had on my own.
Nice work, Spencer.
Yeah.
Wayne Davidson, I don't think he was the CEO of Bristol Myers. He was one of the top executives, but his son Scott was in my Cub Scout class and we became friends, and they took me to their lake house when I was 8 and rocked my world. I was like, this is too cool. I jumped in Barkley Lake and sank like a rock, came shooting out of the water straight back into the boat. And it was probably 6 years later before I did that whole endeavor again. I heard when I was in my 20s, do the thing you fear the most and the death of fear is near. And so I jumped in the Ohio River as a 14-year-old and skied from Owensboro to Locks and Newburgh. Was my Wayne gave me the first shot. I didn't get it done, but I came and did it a few years later. So it was all good.
Yeah.
It's risky out there. So
Yeah.
that's the way it goes. What do you got for us today, Doug?
I see you have the 10-year treasury pulled up on the other screen. Is this how exciting our life has become?
You know, that is an interesting. I'll share this with you.
I mean, you look at like what rates are in the US and then you see what's going on overseas, and it's like it's not twice, but it's pretty darn close. And so is that a 3.2? Is that what I'm seeing in the US, the 10-year treasury? Is that right now?
That's a snapshot I took 10 minutes ago. So okay. Yeah, it is. And so the 3.2 is more than double where we started the year over here, and that has never happened before.
Yeah,
that has never happened. And the yield has never gone up that much in a year in the United States. So we are in a record-setting year with yields. So,
but what's crazy is like if you have a 60-40 portfolio, what I mean by that is 60% into say stocks and 40% into bonds. This is what, like, if there was financial planner college somewhere that you could go to, this is where they would start you is, hey kids, let's learn the 60-40 portfolio. This is what you should have in your retirement. And that 60-40 portfolio has just been so tough this year because of bonds and stocks basically doing the same thing.
Yeah, that's I watched a show called Woodstock 1999 over the weekend, and it is a 3-part series. And it's like, if you could plan to make everything go wrong, how could you make everything go wrong? And that's what happened there. And with the 60-40 portfolio, if you have rising interest rates and a declining stock market, it is not a good plan.
It's brutal.
Yeah. So that's the process. That's what's going on with the yield. And
I mean, it's crazy that at 3.2, I mean, to me that sounds delicious.
3.2?
Yeah, 3.2 just sounds great. Like, how many of us would like to have earned 3.2 this year? Yeah, that'd be nice.
Yeah, I think a 3.2 interest rate is partially what got me interested in the stock market. Is as I've always been a saver, and I was getting 3.2% on my savings account, and I just thought, man, this is not going to get anywhere very fast. And then I heard of a stock that had a 7 or 8% dividend at that point in time. And just as a young person, I thought, man, I'll take the dividend and risk the capital rather than just kind of meandering around with that um, low interest rate on the savings. So that's the scoop on the treasury. What
Yeah,
else is
I
on your
think,
mind?
to piggyback on that, that's something that interested me early on was this conversation. Okay, you can get the 3.2, or you can get the dividend stock that pays some interest, you risk the capital, or you can get the stock that says, hey, you know what? We're making some money here. What if we took this money that we're making and we started to buy high-tech robots? Or we started to reinvest into technology, or we bought another company that we thought was undervalued. That just blew me away, that concept
Right,
of
right.
risk taking. It's not safe. But these are the folks who've had some winning and they've got some momentum behind them. And they're saying, hey, let's take some more risk. Let's put ourselves out there. Let's improve ourselves. That's the American way.
Yeah.
I love the story of a growth stock.
Well, and that's with multi-billions of dollars, but even the growth company down the street here that's trying to make their coffee shop grow or whatever, just the idea of risk is it's just like getting on those water skis or that wakeboard and saying, okay, what are we going to do here?
Yeah, yeah. So anyway, that's pretty cool to see. What are we looking at now? The S&P 500?
Yeah, what do you think about this? I'll share that with you.
Well, the S&P 500 doesn't really care what my opinions are, and it proves that to me almost every day. But it has been really wild because just how many days ago we were looking at the market. It was a week ago, Tuesday or Wednesday, and things were really looking pretty good overall. And then the feds decided to meet in Wyoming and do some fly fishing and make an announcement or two, and boom, reverse. And so we started to come up so close to that 200-day moving average, and now it seems like we're quite a bit away. So I guess what I think is it's a pretty good time to be cautious, and there will be a time to have risk on, and I'm looking forward to that. But for today, until we get back up to that 200, it's a time just to go enjoy the weekend.
It is an anxious time out there, all kinds of anxious news. Somebody was talking with us yesterday about one of the gurus from the book The Big Short, and he thinks, this guru thinks the world's coming to an end basically. And really, I don't know that you need to worry about that.
Yeah,
I think if you have some disciplines in place and you have thought out your strategy is what we're doing on your behalf, then you don't have to be overly anxious. But you just plug in some stop losses and some limits on what you're willing to do, and away you go.
And on the flip side, when times are rolling and people are calling you and saying, hey, can you teach my son about investing? Can you teach my daughter like what you do? On the flip side, you don't really have to be too greedy either or all in with a strategy, because the strategy will dictate what you need to be doing, not the market, or not what your neighbors are doing, or not what your 401k has done.
Yeah, and this market, it looks like it's kind of narrowing down, that we're forming a triangle over here to the right of the chart, and we hit a low yesterday, and it came marching back up with really good volume over there. And the open markets opened up today, and they're trading a little higher. We'll just see where that goes. The market has to bottom before it can go up. That's pretty profound, but when it's going down, there's a day when it'll stop going down, and when it goes up, then you'll see some really great opportunities. And I think that's what keeps me excited right now, is there's some opportunities coming our way.
Put your cursor over there the last couple of days. We've had a little bit higher volume coming into play. And so I think what I would love to see is I'd love to see the volume drop down and just kind of ride that 50-day for a little bit, establish, just chill out.
Yeah, I can I can see, I just kind of, what I kind of envision is very similar to that, but my guess is it's just gonna meander in the next few weeks in this kind of an action, and when that happens, then we'll probably, these two lines will converge. Probably the 200-day and the 50-day will probably converge about the same period of time, and something out here probably in early mid-October be my guess. Something's going to force the hand of the market, and we'll be ready.
We had a really encouraging time with a friend of ours out in California this week. We were Zooming with him and just talking about the markets, observing the markets, and he spent time tutoring or learning from Bill O'Neill, who's one of Keith and I's investment heroes. And one of the things that he liked to talk about is the length of a bull market. I just want to encourage all of you that there will be time where you'll be able to participate in a really good bull market. Will it be nice, smooth, straight up? No, but there will be times where we're back up over that 200-day moving average, and things are looking good again.
Yeah. Well, there's a picture of the NASDAQ. It's kind of doing the same thing. It's not as strong as the S&P. If you can see right here, this is the 50-day moving average, and the NASDAQ is below the 50-day. And if we go to the S&P, well, I guess it's right below it too. It was a little closer to it, but what we're seeing is just kind of normal weakness. And one of the things one of our friends, Patrick, said this week is that historically, this is the time of the year where the market turns around and starts working it up. It's way up. So a lot of us have been kind of programmed to think this is the time to be fearful, but really the time to be ready to be optimistic is when you're coming out of the bottom like this. So we'll see what happens.
Keith, if you would put your cursor, we can stay on the NASDAQ, but go to around April 27th of this year. So Keith is moving towards, late April, and in late April on the American Association of Individual Investors, this marks the 1-year bearish high, where the survey pointed out that nearly 60% of those who took this survey were bearish at this point.
Right here in April of this year?
Yeah, now go to right around 11/10/2021. And this points out in the last 12 months where the survey indicated the highest bulls. So this is where the highest optimism was. Isn't that interesting?
Yeah.
And 48% of those taking the survey at this point were optimistic. And so it's hard to go on optimism or pessimism. We just have to get in line with what the market is telling us and sharing with us. And so at that point of optimism, when things were looking good, you may have been an investor, you may have been in, but there comes a point in time where you just look at the portfolio and say, do I need to be all in today? Do I need to increase some safety to my portfolio? Or is there a time, do I need to have a little more risk on? And this can be your guide to tell you, and it's just telling you how people are voting in the stock market, price and volume.
Yeah, the market is it's battling for that right now, and so you can be anxious and worrisome about it, or you can say let's stick with our strategy and get ready to get ready. And I think that's really where we're at right now. I love to see the 50-day and the 200-day turn up, and the 50-day has done so, but the 200-day is still trending downward. So we'll see where that goes in the days ahead. It'll be interesting.
Spoke a couple weeks ago about different ways to retire. You have Social Security, you have portfolio withdrawals. You might have a part-time job. And I was having coffee with a friend of mine today who got called out of the bullpen. He describes himself as a substitute teacher, but basically he's a CEO for hire. And he's been working since July out west for a healthcare group, and it's made an impact on his family's income. And so just being available with your certain skill set or your certain interest, what a great way to supplement your retirement and add a little juice to the fire. And so it was fun having coffee with him this morning.
That's cool. I think it's particularly for those folks who have already retired and maybe have some time on their hands. It's maybe the greatest time ever to throw your hat in the ring as a retiree, because there's such availability of opportunities. There's a work ethic you bring to the marketplace, and I think people are thrilled to just have those contributors available today in this market. So
That
we'll
work
see.
ethic is built from your youth.
Yeah.
I mean, the culture that you grew up in, it's value today. I was over at Jimmy John's. I said, "Where is everybody?" They all went back to college. And so they're starving for people. And so, yeah, there's your skill set has a value out there. But you're trading time for money, and so how much of your time do you want to trade?
That's good. That's good. The housing market,
Yeah.
it picked up, and the median house price at the end of April 2022, according to the U.S. Census Bureau, was $457,000, and at the end of June, I think it was $402,000, dropped from 457 to 402. And so that tells me a lot of things. That tells me when people are updating their net worth statement, they're going to see a decline on most assets in 2022. They're going to see inflation on their cash flow. And so that could be really discouraging. I guess to keep in mind, the average home price in the United States for the decade ended May 31st of 2022 grew 8.1% a year.
Crazy.
That has not been my experience since I've been a homeowner. The average increase that ended 2012, and that would have been incorporated the housing crisis of the 2007 through 9 timeframe. At that point, they grew at 1.8 or 1.4%. I think normalizing all that, when I think of what my houses have done over the year, I think they've pretty much inflated at 3%. That's kind of what they've done.
Yeah,
That's not a U.S. Census Bureau of the Treasury. That's just the key experience. And I'm pretty sure on average, I put 3% a year into them in some form or fashion. So,
and that's owning it.
Right.
Like, imagine what it would be like be tied in an interest rate.
Yeah. So it's just a quality of life choice as home ownership. If you get into that mindset that it's an investment, it gets a lot more emotional in what you're thinking about. And so just be careful out there in the housing decisions, all kinds of things going on that might get you deeper in a housing portion of your wealth than you might want to be.
Yeah. Was it mark-to-market accounting that was the topic back in 2008? So if you have a house that's worth 400 today, and then you get the appraisal 2 months from now and it's 375, but yet you took a home equity loan when it was 400,000. I mean, that's a bit of a shocker. And so I think just even treating a house like a bond is probably a good idea. It's not going to do a whole lot for you, but it is going to provide a great place for you to live. And just pouring your time and resources into other places is probably a smart idea.
Yeah, I think over the years, I've heard people say my house is my greatest investment. And a lot of times the people I've heard say that have tended to maybe not be the greatest savers. And so what a house can do is be a forced savings for you, that you build up equity, whereas you might not have done that in the past. Yeah. And really during my career, at the beginning, the 401k wasn't really a thing. It was a really novel idea, and it's become just pretty much expected and normal. And so I think a 401k and a house have both been kind of forced savings for people. And I think those two places are where wealth is probably built the most for a lot of people. And so there you go. It's those weekly contributions.
Buyer beware out there. I mean, there's all types of excitement built up in real estate too. Real estate's coming off an awesome run, and there's been industries built upon this. And so these industries that have been built upon the success and backbone of a hot real estate market, those folks need fresh capital to keep it going. And so, just like the market, when we're talking about the market, there are times to look at it, times to go on vacation. Same thing is true in any market, whether it's real estate, farm ground, buying a business. I mean, there's just so many different types of markets out there, and there's always somebody wanting to sell you something.
A market will cycle. That's what you need to know.
Yeah.
If you ever catch yourself thinking that this will never go down, you have caught yourself in a lie. What else, Doug?
I think just take a look at your expectations, and whatever those expectations are, just making sure you're on track with those. It's easy to get off track, especially when you're seeing rising costs in your family budget, or maybe even in your desires. Just getting back to your expectations and making sure you're playing within those rules. That's where I'm at right now.
Well, I think that's a good place. What's last question before we call it a day? What is the most laborious job that you've ever had?
Well, I've had a few of those. The one that was probably the most laborious was for a summer I built garage doors in a factory, and there's just no excitement to it for me. Maybe there was for somebody, but for me it was all labor and not a lot of fun. I mean, they would have had to pay me a lot of money to stay there. I don't even think they could have done that. I just didn't like it. There was no zip. And so yeah, that was the most laborious.
Yeah.
But somebody could have a high paying, like high profile job today, and that'd be the most laborious for me if they hate it.
Yeah.
How about you?
Well, I was thinking about that, and the kind of on the back of my business cards, I'll scribble the things that I think are most important about finances, and one of them is like what you do. And I used to say, do what you like, but not everybody's going to be fortunate enough to do what they like, but everybody can have the mental attitude to learn to like what you're doing. And it doesn't mean you always have to do that, but if you can't learn to like what you do, you're probably going to carry a bad attitude from job to job to job, and that's just not good for anybody. But for me, there's been a number of things I've had to learn to like to do. I did moving and storage. I did aluminum siding installation, a lot of construction work, and those where I was actually physically working didn't seem as laborious to me, like when I was moving or hitting a hammer or whatever. But I think a plastic factory, I lasted, I think, 2 days, and I think they could just tell my lack of zeal for that role, just pulling the runner piece of plastic out of all the gadgets that were landing in the bin. And I think they threw me on a lawnmower the rest of the summer instead of doing the plastic factory. But yeah, the monotonous of the repetition is really hard for me to learn to like what I'm doing if I was doing something really repetitive.
I can tell you one of my favorite jobs was when I was a high school kid. I worked for a guy named Mike and his mom, who owned a BMW Nissan dealer in Muncie, and it was a one salesperson, 2 service guys, and a parts guy. And I was they called me a porter, which basically meant I washed the cars. And I absolutely loved that job. I couldn't wait for school to get out to go be around the type of people who were coming to Muncie to buy a BMW. Those didn't exist back then. I mean, you couldn't fake it. You had to have the cash to own one. And so these were people who were passionate about the new car they were going to buy. And I got to meet these types of people. And it was so much fun to be around them. And it was fun to be part of a team, because it was a small group of people. So even the car wash guy had value. And it was a great introduction to work life. I loved it.
That's very, very cool. I hope all of you guys have a great Labor Day weekend. I hope you're able to encourage those that you hang out with over the weekend, and particularly encourage them in their roles, whatever roles they might be in life. Just give them a boost in that, and just make the most out of your Labor Day weekend. And we'll look forward to seeing you all next week.